I want to start with something that most people watching the financial channels have never had explained to them, because the people who run those channels have no reason to explain it. There is a ceiling that hung over silver for the better part of half a century, a hard, invisible lid. And the men who trade this metal for a living, the desks at the big banks, the voices you hear telling you to stay calm and stay in stocks, they understand exactly what happens when a lid like that finally lifts. They just have no interest in you understanding it too. If you own silver right now, or if you have been thinking about it while it sits where it sits, this is about your money and your retirement, not somebody else's. So stay with me, because by the end of this, I want you to understand the single most important thing about where this metal stands today and why the price you are looking at may be one of the more temporary things in this entire market. Here is the fact that should stop you cold, and it is not a price on a screen today. Silver has run into the same wall twice in modern history. Once at the very start of the 1980s, and then again a generation later at the start of this decade's early years. Two separate tops, more than 30 years apart, and both of them died at almost exactly the same place. Think about what that means. A whole generation was born, grew up, and started families in the span between those two peaks, and silver ended up right back at the same ceiling both times, unable to get through. That level, the old $50 wall, became the most important number in the entire silver story. Not because there is anything magical about it, but because the market treated it as the edge of the map. For decades, any time silver got close, it got slapped back down. The financial press had a comfortable little story ready every time. Silver is speculative. Silver is a fool's game. Silver always crashes. Don't get greedy. And every time, the metal obliged them by falling. So a whole generation of savers learned a lesson that was only ever half true. They learned that silver could not break out. What they were never told is why. Let me walk you through the real mechanics, the part nobody puts on the evening segment. Because when you understand how that ceiling was actually defended, you stop seeing silver as a wild, untrustworthy thing, and you start seeing it as something that has been held down on purpose by the structure of the market itself. Go back to that second peak, the one at the start of this decade's early years. Silver was climbing hard, running right at the old ceiling, and then in a matter of days, it fell by roughly a third of its value, gone, almost overnight. Now, here is the question the news never asked out loud. What changed about the metal in those few days? Did the mines suddenly produce more? Did the world stop needing silver in its electronics and its solar panels and its wiring? No, nothing about the actual metal changed at all. What changed was the cost of holding a position on the exchange. The people who run the futures market raised the margin, the deposit you have to put up to hold a contract, and they raised it again and again in quick succession. They made it more expensive to hold, so the leveraged players were forced to sell, and the price collapsed. Sit with that, because it is the whole game in one story. The exchange did not change the value of silver. It changed the cost of holding silver, and that is a lever the big desks understand intimately, and you were never told about. They can move the price of the paper without a single ounce of the real thing changing hands. That is how a ceiling gets defended. Not with logic, not with fundamentals, but with the plumbing of the market itself, controlled by the very institutions that profit when you get scared and sell. Now, I want you to hold two ideas next to each other, because this is where it gets important for you specifically. That old $50 high was set at the very start of the 1980s. And here is the part that will change how you see this metal forever. If you take that old peak and simply adjust it for what has happened to the dollar since, for all the inflation, all the printing, all the erosion of what a dollar buys, the real level of that old high is far, far above its plain $50 number. In terms of actual purchasing power, silver has never gotten back to where it was more than 40 years ago, not even close. Every other asset you can name, stocks, homes, the price of a loaf of bread, has multiplied many times over since then. Silver, in real terms, is still underwater from a peak your parents lived through. That is the quiet scandal the financial media will never frame for you. They will show you a chart of silver and say, look, it is near an all-time high. Be careful, do not chase it. But that chart is a lie of omission because it does not adjust for the dollar losing its value the whole way along. In real, honest purchasing power terms, silver is not expensive at all. It is one of the few things left that never caught up. And there is another way to see the same thing, one of the oldest measures in the whole business. For centuries, people have compared silver to gold, how many ounces of silver it takes to buy a single ounce of gold. And for most of modern history, that relationship has lived inside a fairly settled band. Right now, it sits well toward the wide end of that range, which is just a technical way of saying that silver is historically cheap compared to gold. When that gap gets stretched this wide, it has a long habit of closing, and the way it usually closes is silver playing catch up. I want to be careful here and not oversell it, because these relationships can stay stretched longer than anyone expects. But it is one more piece of evidence pointing the same direction as everything else. And it is one more thing the calm voices on television somehow never mention when they are warning you off the metal. And I need to pause here, because this is exactly the point where a certain kind of viewer starts to feel something, a mix of recognition and worry, and it is the right moment to talk about protection. If you have $100,000 or more sitting in a 401k or an IRA, I want you to know something the big banks are not eager to advertise. The central banks of the world, the most powerful financial institutions on earth, have been buying physical gold at a record pace, hand over fist, more than 1,000 tons a year for several years running, roughly double what they were doing a decade ago. They are quietly moving into real metal. And here is what almost nobody tells the ordinary retiree. There is a completely legal way for you to do the very same thing inside the retirement account you already have, without triggering taxes or penalties. You can move a portion of that savings into physical gold and silver held for you in a proper account. This is not some exotic thing reserved for insiders. If you have that 100,000 or more in any retirement account, this is for you as much as it is for them. If you are watching this on your television, just scan the QR code on your screen. If you are on your phone or your computer, go to jeffreedguide.com and we will send you the free guide that walks through exactly how it works. Then let me get right back to the story, because the next part is the one that matters most. Because here is what actually happened. After holding for the better part of 45 years, that ceiling finally gave way. The wall that killed two separate generations of silver rallies. The level that the financial press used to laugh at buyers about, the metal finally climbed up and over it. And I want you to understand why that is not a small technical event. It is the single most important thing that has happened to this metal in your lifetime. Think about what a level like that really is. It is not a line on a chart. It is a wall of memory. Every person who bought near the old top and got burned. Every trader who learned to sell into strength there. Every algorithm programmed to expect a rejection at that price. All of that psychology was stacked up at the ceiling like sandbags. For decades, every approach to that level brought out an army of sellers who had been trained by history to expect failure. That is what makes a ceiling so hard to break. You are not fighting the metal. You are fighting 45 years of learned surrender. So when a wall like that finally breaks, something changes underneath the surface that most people cannot see. The sellers who lived at that level are gone. Their positions have been cleared out. The memory that capped the price for 2 generations has been overwritten. And now that old ceiling, the thing that used to be a lid, becomes a floor. The very level that rejected silver twice in modern history is now the ground it stands on. That is the whole meaning of breaking out of a long base. The resistance becomes support. The prison wall becomes the foundation. And this is why I get uneasy when I hear people talk about silver being stuck under the number in the title, as though that is some permanent, comfortable resting place. It is not a resting place. It is the narrow zone just above a ceiling that took 45 years to break. Historically, when a market spends that long building a base and finally clears it, the time it spends just above the old wall tends to be brief. Not because anyone can promise you a price or a date, but because the thing that held it back for a generation is simply no longer there. Now, let me rehook you here, because this is the part almost nobody gets to, and it is the deepest layer of the whole story. Everything I have told you so far is about the chart, about memory and levels, but underneath the chart, in the physical world, something even more important is happening to the actual metal. For several years running now, the world has used more silver than it has produced, a real structural deficit, year after year. And silver is not like gold in one crucial way. Gold is hoarded. Nearly every ounce ever mined still exists, sitting in vaults and jewelry and coins because people treasure it and hold it. But silver is burned. It gets used up. It goes into your electronics, your solar panels, your medical devices, your electric vehicles, spread across the world in tiny amounts that are simply not economical to ever dig back out. Gold is saved. Silver is consumed. And you cannot consume more of a thing than you produce year after year, forever, without eventually running into a wall of scarcity that no margin hike and no headline can paper over. And here is the piece that makes that shortage so stubborn, the thing that keeps supply from simply rushing in to fix it. Most of the world's silver is not dug up on purpose. The great majority of it comes out of the ground as a byproduct of mining other things: copper, lead, zinc, the base metals. Which means that even when silver gets more valuable, the miners cannot just decide to produce a great deal more of it, because their real business is the other metal. Silver comes along for the ride. So supply is slow, clumsy, and unable to respond quickly to price the way an ordinary market would. On the other side of the ledger, the demand keeps broadening. The wiring in electric vehicles, the vast new data centers being built for artificial intelligence, the electrical grid itself, all of it leans on silver, and none of it is going away. Supply that cannot respond quickly, meeting demand that keeps growing. That is not a temporary imbalance. That is a structural one. That is the difference between this breakout and the ones that failed before. The old tops were driven by speculation, by leveraged traders reaching for a quick gain. And speculation can always be squeezed out by raising the cost of holding paper. But you cannot squeeze a physical shortage with a margin call. You cannot print more silver. When the industrial world genuinely needs the metal and the above-ground supply has been drawn down year after year, the game changes in a way the paper players have never had to reckon with before. And that, more than any chart pattern, is why this ceiling break is different from the ones your parents watched fail. I think of a certain kind of man when I talk about this, and maybe you know him, or maybe he is you. A saver who did everything the careful way, who put a little into silver quietly over the years, not to get rich, but because something in him did not trust a world that prints money without limit. He watched that ceiling reject the metal, watched the television voices laugh at people like him, and he sat at his kitchen table more than once, wondering if he was the fool they said he was. He was not a fool. He was early, and being early always feels exactly like being wrong, right up until the moment it doesn't. That is the cruelty of it, and it is also the opportunity in it, because the reward was always going to go to the people who could sit through feeling foolish while the crowd was still asleep. I do want to be honest with you, because the people who are only trying to sell you something never will be. This is a case, not a guarantee. It is not personal financial advice. Silver is volatile, genuinely, brutally volatile. It can drop by a third in a week on nothing but a change in margin rules, and we just walked through a time when it did exactly that. Anyone who tells you they know the price or the date it will reach is either fooling you or fooling themselves. So here is how a sensible retiree should think about it. Own the real metal, the physical thing, not a paper promise from an institution that can change the rules on you. Size your position so that a sharp drop, and there will be sharp drops, can never force you to sell at the bottom. Never let a shakeout put you in a position where you have to hand your metal to the very desks that engineered the fear. The people who lose in silver are almost always the ones who bought too much with money they needed and got flushed out at the low. Do not be that person. And now I want to land the thing I have been building toward this whole time, because it is the part that matters most, and the part nobody on the financial channels will say to you plainly. The smart money already understands everything I just told you. The central banks buying metal by the 1,000-ton, the institutions quietly accumulating, they already see the structural shortage and the broken ceiling. They are positioned. But the mainstream, the pension funds, the financial media, the ordinary advisor, they have not caught on yet. They are still telling you silver is speculative, still showing you the unadjusted chart, still repeating the story that killed 2 generations of buyers. And here is the hard truth about how these things always work. By the time it becomes obvious, by the time silver leads every news segment and every advisor on television is suddenly recommending it, the easy part will already be behind us. Nobody sends you an invitation. Nobody calls your house to tell you the moment has arrived. The whole point is to understand it before the crowd does. while it is still quiet, while the mainstream is still asleep. We are not at the obvious moment yet, and that, precisely, is why this matters now. So let me bring this all the way back to where we started, to that ceiling that hung over silver for the better part of half a century. Two tops, a generation apart, both dying at the same wall. That wall is broken now. The metal is standing on top of the very thing that used to hold it down. The level in the title, the place silver sits today, is not a ceiling and it is not a home. It is the narrow strip of ground just above a prison wall that took 45 years to fall. History says a market does not linger there for long, not with a real physical shortage underneath it and the old sellers gone. I cannot promise you a price, and I would never insult you by trying, but I can tell you honestly and plainly that silver sitting under the number that brought you here is very likely one of the more temporary things in this whole market. If you watched this all the way to the end, you are exactly the kind of person this last part is for. I hold a free one-on-one educational web conference for people who have $100,000 or more in their retirement savings and who want to understand how to actually protect it, calmly, before anything feels urgent. And that timing is the entire point. The window where a decision like this is still cheap, still unhurried, still fully in your control is exactly the window when nothing feels like an emergency, which is right now. Once it is obvious to everyone, the calm is gone. So if you want to have that conversation, no pressure and no obligation, mention that you watched this full video. If you are on your television, scan the QR code on your screen. If you are on your phone or your computer, go to jethreedguide.com. Take the quiet moment while you still have it, because nobody is going to hand it to you, and by the time they would, it will already be too late to be early.